on the technicals, the volatility gauge, which tracks expected Nifty swings over the next 30 days, has seen a record low close yesterday. Now, historically, such low readings have often preceded sharp market moves, raising questions on whether complacency is setting in across equities. Kunal is joining us to break down the India VIX on charts and tell us what this means and what this could mean for the market in the near term. Kunal.
Absolutely, Snehi. This is something which has not happened for the last almost 17 years for the index in terms of the India VIX reading, where the India VIX has closed at the lowest level yesterday recorded, almost at 9.84, 9.85 on the India VIX. Now, what is the significance of that? Now, India VIX, generally we say that there are two categories of VIX. One is a high reading of VIX, the other is a low reading of VIX. High VIX generally indicates that there is a lot of uncertainty, panic, but low VIX in a typical scenario indicates that it's a sign of calm, comfort, complacency. However, we are in that zone where the markets are still a little bit more volatile, but then the volatility is restricted into a narrow trading band for the index. So if you literally draw a flat line for the last 3-4 months, we've been just about gyrating at 25,750 mark thereabouts for the indices. Why is this significant? This is the charts for India VIX, and this is the first time where we've hit levels of sub 10 on closing basis at the lowest level compared to the last 17 years of data for the India VIX. The implications of that is very, very important and significant because the low levels of India VIX, does it indicate that the markets are going to a stage of a potential rally on the upside or a potential correction? So we looked at the data points on a historical basis where we've correlated the India VIX chart with respect to the Nifty. The recent recordings which were seen September 2025, a very similar observation where the India VIX, as you can see, the lower grade, where the India VIX was at the lower end, sub 10 levels. That was a time when on 18th of September, the Nifty actually formed a top. And then what happened post that was almost like a 1 week to 10 days of correction, 1,000 to 1,500 point correction for the Nifty. Post that, we saw a bounce back. So that VIX normalized from being at an oversold or a very undersold category for itself to a neutral category. That's where the markets got to a resumption of the rally. A very similar trend happened in 2023-24, a stance where the India VIX had back again hit levels of closer to 10 odd mark. That was a time where the Nifty started to show signs of a corrective mode, as you can see over here, that the Nifty started to show signs of a correction from here on when the India VIX started to show signs of deep undersold levels closer to 10 odd mark. The most trickiest one was in 2019-20, and you remember what happened in the first half of 2020. That was the time, just end of 2019, that the India VIX had hit a major low for itself. And as you can see, post that followed a initial bout of a rally, but then a major correction followed. So India VIX on a net-to-net basis is a very crucial and extremely key indicator. It tells you the sentiment behind the markets, but the reading, which is now showing that the India VIX is below 10, indicates one thing for certain, that we are about to end this phase of a consolidation and a major trend is yet to onset. So that's why traders who are more disciplined would probably have an advantage over here. But the ones who take extreme amount of an excess amount of leverage, they are the ones which have to be a lot more cautious, with especially the readings of India VIX below 10.